Hello everybody. So as expected, Michael Saylor bought the dip for the 10th week in a row. Remember, 12 weeks is a quarter, so he's gonna have bought probably every single week. And is it something we're gonna see going forward? Well, maybe, or at least I hope. I hope so. I really hope so. The stock is down slightly today, but nothing that bad. If you're used to the volatility of MicroStrategy, this won't phase you. And he got a good price, 95,900. He got a good price, I think. Let's talk about the spreadsheet. I updated my spreadsheet, of course, with the latest number. Of note, I want to point out that actually SMLR also bought the dip, and for SMLR, they bought quite a bit at 191 million. That's quite a bit for SMLR. So they bought the dip too. Note how MicroStrategy is now trading under a 1.9x. Once again, 53% of the market cap of MicroStrategy is made up of Bitcoin. So MicroStrategy is cheaper relative to the amount of Bitcoin on the balance sheet. And SMLR, I have never seen SMLR this cheap. SMLR 2 weeks ago was close to a 3. Now it's a 2.35, noting that SMLR is actually down quite a bit today at a minus 6.33. MicroStrategy is down 4%. Bitcoin is down close to 3%. So it makes sense, right? SMLR as a greater premium to NAV, so it's down more. MicroStrategy is down a little less, but all of these are leveraged on Bitcoin, and so they are going to be down more than Bitcoin itself. The outlier is Mara. Mara keeps getting battered. It's down even more than MicroStrategy, even though when I look at the price to NAV, in my view, Mara should be down less today than MicroStrategy. So these things don't trade with perfect correlation to Bitcoin, but it's roughly the same. Mara may be being punished a little more today, and I don't know why, except there's a general hate for Mara in the market and people love to short Mara. But these movements are in line with what I expect for MicroStrategy, and what matters, of course, is them generating the Bitcoin yield. I've said before that the Bitcoin yield is the chief reason, at least for me, is the chief reason why I own MicroStrategy stock. I want them to generate a Bitcoin yield for me. I want to note that this is the first full week of 2025 for which they are reporting today. So last week's buy still counted for Q4 2024 because the December 31st was on a Tuesday, and so he counted that towards Q4 of 24. This is the first buy of Q1 of 25 and first week of Q1 of 25, and he achieved 0.32%. So if you do a simple times 52, that means if he keeps on this track, he's going to do a 16.6% yield for the year if you compound it, which is the better way to do it. It's the normal way you're supposed to do it, unless you assume the yield is going to drop week to week for the next 52 weeks. Anyways, it's 17.18%. So 17% roughly is what we're out, assuming a teeny tiny computing week after week. So 70% is greater than the guide. It's greater by 70% of the high end of the guide. He had guided between 6 and 10% for 25, 26, and 2027. This is higher than the guide, and this I keep saying they're going to upgrade the guidance. They are going to do more. And of course, if I input that in my simple model that I keep showing on this channel, here's how the math goes. Let's say you have $91,000. You have 91K. You want to buy a Bitcoin. So you take your 91K, you go on Coinbase and you buy your Bitcoin, or you go on Robinhood and you buy the IBIT ETF, and so you get one Bitcoin for 91,000, and you wait 10 years. 10 years later, that is still one Bitcoin. You still have one Bitcoin. Now, let's say you want to get Bitcoin exposure via MicroStrategy. Instead of buying one Bitcoin, you decide, I'm going to buy 91,000 of MicroStrategy stock. And so you go ahead, you buy 91,000 of MicroStrategy stock. Today, you get 0.53 Bitcoin exposure. You only get 0.53, half a Bitcoin. You get roughly half a Bitcoin. But that half a Bitcoin exposure that you have, that synthetic ownership of Bitcoin via MicroStrategy stock that you have, it's going to grow at 17% in year one. After year one, you get 0.61. After year two, you get 0.71. After year three, you get 0.83. And if you assume for 10 years he's able to do 17%, it compounds. So compounding is the wonder of the world, as Einstein used to say. And so if you end up on year 10, you get 2.5 Bitcoin, assuming it keeps compounding at 17% every year. I believe 17% is a low ball. In my view, he can do much better if he keeps monetizing that NAV. The dilution works. When you dilute to buy, you accrete, as I've demonstrated, I believe, multiple times in these videos. And of course, he even needs to put in higher gear the convertible bond strategy, which is barely enacted so far. He's almost done with the ATM. I guess in Q1 he's going to have to expand the ATM. That would be my guess. And let me conclude this video by briefly talking about why Bitcoin's down. Well, Bitcoin's down because it's the asset that's easy to sell. Maybe there's a little fear about inauguration and when the Bitcoin strategic reserve, if it's going to happen or not. But I think the biggest reason why the markets are not that great right now is the 10-year yield. The long term end of the yield curve, the long term, the rates of the bonds. That's why the dollar is so strong. The 10-year yield. I mean, we're essentially at an all-time high again. We're back at max pain again. We had max pain mid 2023. We're back at max pain. Another way to say it is that the bonds are back at their lowest level. So if you're a retiree and you were put into a 60-40%, 60% stock, 40% bond portfolio, you're not happy right now because these bonds are at an all-time low. And it's very funny. I actually took a full screenshot of CNBC today. I had said I need to stop using CNBC, but anyways, that's how I learned things like that. In total, over the past 4 years, student loan debt reliefs, which is one of the tinier items of money spent, one of the smallest items of money spent, is a casual 183 billion. Just casually 183 billion. It's like whatever, 183 billion. Just casually cancel. So the government spends money like it's nobody's business. The deficits are going to continue, and at these rates, at these interest rates, that's costing a fortune. That's costing way too much to do the deficits, and that is why I believe the Fed's going to print. They're going to have no choice but to engage in yield control and buy the bonds to drop the rates. And that is because this could become a systemic issue, unless, of course, our government didn't need to issue more debt, and unless, of course, we didn't have, I don't know, 30-40% of S&P 500 who relied on the insurance of bonds to finance their revenue. And unless, of course, we didn't have the insurance companies and the banks and Social Security who own bonds. Oh, wait, oops, the entire system owns bonds and long-term bonds. And so they're at an all-time low. And so what happens if you have commitments? What happens if you have disbursements? What happens if you have Social Security to pay? Well, there's going to need to be QE. There's going to need to be some major money printing happening, in my view, and that's why Powell is upset, because the 10-year is not dropping naturally, which means that if the 10-year is not dropping naturally, the Fed's going to have to intervene, and they're going to have to buy some bonds to make those long rates go down. This is the financial system calling the bluff on the deficit going down and on the creditworthiness of many of the financial actors in the US and the banks and the government. And so that's bullish for Bitcoin in my view. And so I'm very happy to own MicroStrategy. So anyways, this was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please please subscribe, follow me on X, follow me on Patreon. Thank you for watching and have a wonderful, wonderful day.